Hello, 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 everyone. How is everyone doing today? I hope you didn't get chopped up today. Choppy, choppy, choppy. Oh, you know it's non-farm payrolls tomorrow, but I've never. All right, before we get started, Bob will be on. He might be a little late. I just got a text from him. Well, let me get to hellos first, then I'll go in this. Hello, Connor. Good afternoon, Josh. Hey, Rich. Happy Thursday. Oh, it's Thirsty Thursday. Good evening, Anissa. Hope you had a wonderful day. I think the market will rally till the end of the year. All right, you're in agreement with Bob. Time to get ready for 436 do or die economic report for the stock market. Exhausting. Hey, Ted. I'm not even focused on that. I've never watched a soap opera in my life, but the Twitter Elon thing is like a friggin' soap. I imagine it's what a soap opera is. That's how people get hooked. It's how people get hooked. So I mean, it's distracting. It is distracting. Hey, John. So I just want to leave it as that. It's like a soap opera for us nerd trader types. Oh boy, it can get addictive. So let's see. Big news. I mean, we don't. There's nothing really to review today. We already talked about it this morning. We had lots of Fed speak. I'll get Bob's opinion, but again, they've pretty much not deviated from their plan, and they've reinforced in my mind. Yeah, things can break, and we're going to keep hiking. And yeah, we have more to go. And yeah, we're going at $1.25 more this year, unless something drastically changes. So whatever that is, I mean, I think the minimum we'll do is $1, 100 basis points. They're on track for 125 though. Two hikes left this year, and they could go higher next year. I think the real debate is how long the pause will last. That's the only thing left. So, is non farm payrolls going to sway their decision tomorrow? I don't think so. I think the market's just going to trade off the number, period. I still think it's looking like it's poised to go higher. We got the probabilities, unless that double top on the S&P triggers on a 4-hour basis, the probabilities favor the higher prices. Uh, Break out to the upside, but I keep stops on there with that double top still in place. We did have the extra rotation. It needs a 4-hour close, by the way, 4-hour close at a minimum to trigger it. So non-farm payrolls tomorrow, 1 hour before the open. 1 hour. So I'm glancing back and forth to see once Bob shows up, so I can. He's not in the green room yet. He's not in the green room. We got 250,000 forecast, so less than previous. We got 3.7 headline unemployment number forecast. Then everything else is minor for that, although hourly earnings will be interesting. I want to get Bob's take on something else once he shows up. And then we just got on this, at least on this site, only one Fed speaky tomorrow. So that's it, and the rig counts for oil traders. This actually sort of makes it look worse than it was. You had a slight little pullback again. We're just sitting there with a sideways pause still. Oil still rallying. Exxon getting to very overbought conditions. Oil not pushing up that much. Watching for that topping pattern. FOMC's up to 72% for the 75 basis point. Still negative gamma territory, so we can be prepared for volatility. Still in fear mode. By the way, this is what I want to get Bob's take on. See, this is very interesting to me. Costco not ready to cut prices as shipping commodity costs fall, which is what we've been taught. Services aspect, because they've signed contracts and they have increased services prices. I'm just summarizing some stuff. So they can't cut, even though they're seeing some alleviation in aspects. They're not going to cut prices right now, which is embedded inflation. Yeah, stuff might not be going up as much, but we're not going into deflation. We're not cutting right now. We can't. There's not room for us to cut right now until things get a lot tighter, which means probably recession. So this is what we've been talking about with this. Why the Fed's got to keep going, and have they even put on their radar screen? We can keep going until something breaks. Yep. By the way, Tilray tomorrow, but that's, I mean, everything's non-farm payrolls. So that's where we sit. Little end of day final pullback. It's a don't get chopped. You can see the chop back and forth price action. Yeah, there is a little mini double. This still works. I believe so. Let me just double check. Yes, especially 41st and second targets. That's the only thing. Right now, we're still a ways off. Even with this rotation, if you're in doubt, yeah, this is why we can't have a 1 hour close, because of this brief spike up. But if you're in doubt, you see this is still part, even on the 4 hour, it ruled out the 1 hour. What's really nice with doubles, and this is a great clarifying point, is this technically gotten into triple territory on the 1 hour? Yes. So what that's ruled out is a 1 hour close below this point. You need at least a higher time frame close, but it is still valid because this is still one side of it. That would be a close below 37.34. And then we already outlined the levels. The first level is right at that 50% retracement. And then if this does trigger and head down, the key level I'm watching for the closing is 36.64.75, because then I target the most recent lows. Again, currencies are giving us a sign that the data will miss tomorrow. What sign are you getting from what currency? That the dollar's strong? Or what? That the euro is rolling back down after its little run up? The pound? Minor correction, actually sort of a double topping pattern there, but the dollar's back to being the bull in the China shop. So we got the 4 hour buys. By the way, this potential double, which never confirmed or triggered, off the table, and then it just plowed higher. Next key area I'm watching for raising stops off the aggressive buys were between the 112.35 and 112.95. Why? If it's going to roll over again, this is a key area for a rollover zone. You start getting a close back above 112.95, return to the highs. So where do we sit here? So we got that little mini 1 hour double, the key thing otherwise here. By the way, remember, we've still closed above that 62.5 unless this double triggers, which would be interesting because then you have a bullish and a bearish signal. So it's going to be just trading the non-farm payroll break, either up or down. Also remember, still favoring with weekly cycles at the bottom and daily cycles trying to roll over, but not yet rolled over yet. The only thing, the Dow has confirmed yet not triggered. We're going to peek in on this in 15 minutes, by the way. We'll get what Bob thinks, but I can't stay extended period of time today. I have to run out once. Here's Bob. By the way, if you are new here, please do consider subscribing. I just wanted to throw that out there before Bob comes on. Let me hit the magic Bob button. The magic Bob button. There we go. Bob, you are now officially live.
What do you guys want to talk about? Anything
I
about
got a question for you first off. Well, A, did you hear anything different in all the Fed speak?
No. Here's a couple things that I heard. You guys want to know what I heard?
I do.
All right. Mary Daly, we are resolute at rising interest rates. I'm sorry, raising interest rates into restrictive territory so we can bring inflation down and then hold it there until we see inflation truly get close to 2%. Until we see inflation truly get close to 2%. Not until they hear about it, not till they predict it, but till they truly see it. Neil Kashkari, I anticipate cracks in the U.S. financial markets, but for the bar, but the bar for a change in Fed policy response is very high. Here's another one. Oversteering, essentially causing unnecessary downturn that isn't relevant for the economy and the conditions we're trying to achieve. In other words, they don't want to oversteer past the downturn that they're trying to achieve. That was Mary Daly again. All the same shit, all of it the same. The non-farm payrolls number, important, but more important is the combination of employment, wages, and labor force participation, probably even more so than prices. Probably even more so than prices.
Also, did they? I agree. I'm happy you brought up the.
Those are some of the ones I wrote down, Mikey. I'm sorry. I don't
Yeah,
have
the
all of them.
breaking, the break. You know what? They're prepared even for stuff to break.
Yeah.
That was if that wasn't like a nail in the coffin of we're going to change path anytime soon.
I know.
It's absurd, but it also it's starting to look like yeah we're aware of stuff that's going on overseas, but it's every man for himself at this point, or
Yep.
every person for himself.
Yeah.
We're not going to change our path because something could also break in Europe.
So I guess what my whole thesis on the Fed right now, and I said this on both my interviews today, if you're saying that the Fed's going to cause a recession and that means they went too far, they don't think that. They don't think that's too far. They don't think a recession is too far. Again, go back to the Mary Daly comment that I just read. They're not trying to oversteer past a downturn that is more than what they're trying to engineer. That's really what she was saying. They're trying to engineer a downturn. They're hoping they don't have to engineer too hard of a downturn, but they're engineering one. So I suspect that even though they're not saying the word, recession is within the realm of what they're comfortable engineering. And I mean, how could it not be? Again, they're nowhere in their mandate. I've said this a million times on this live stream. Nowhere in their mandate is economic growth, is a GDP above 0.5%. It's not in their mandate. Why would they care? I put on Twitter today, Mike, I think you either liked it or retweeted it or something. If you're mad at the Fed for a recession, that's like getting mad at the fireman who came to put out the fire at the grocery store, and now the water damage is preventing the grocery store from opening. Now, they're also part of the reason the fire started.
That's why I retweeted it.
There was a first responders party in the parking lot, and one of the firemen got drunk, got into a fight with a police officer. They knocked the grill over, and it started the fire. By the way, the police officer is all the checks that went out during the pandemic. But so there's all these different things that started the fire, but now everyone should be in agreement that the fire needs to be put out, because the worst economic ill is inflation. Make no mistake, there's nothing worse than inflation. I guess a depression with 100% unemployment would be worse, but we've never had that. So runaway inflation, what's the word I'm looking for? Consistent high single or double digit inflation is the worst economic ill, because it doesn't matter how much money you make, it's never enough because prices keep going up.
one of the things that jumped out, one of the ones you didn't mention, but that jumped out for me from Evans was at the end of the day, every central bank has to make its own decisions. Like,
Oh, that's something else that I just saw. Hey, I wish I knew where it was. He said something else that I just saw that was really hawkish for Evans. Evans was well known as a dove for a long, long time. Well known as it. California gas prices hit a record high. Somebody
yay,
posted a Chevron sign of $8.35 for regular.
yay,
I could be made up. Like this could be a fake picture. I don't know. Can you see this?
yeah, we can see it. I saw that earlier too.
Could be fake. I don't know. It could be engineered. Who knows? You know, Abraham Lincoln said, believe everything you see on Twitter.
He did.
Yeah.
I think
Quote.
that isn't that why he was shot.
Yeah. It was quoted on Twitter. And
Okay, yeah,
Kim Kardashian got mad and shot him.
okay. That's what I thought. Is that part of the crypto prompt that our wonderful SEC is so diligent on because we're going to have him make him play for Yellen's role?
I hope so.
Oh, jeez.
Lincoln is supposed to be in Yellen's role because the speeches would be better.
Yeah, I think. Do you said this one, Bob? Kashkari also said, "I expect we'll see cracks in the U.S. financial markets." Yep.
Yep. Yep.
What else? Kashkari, big banks need a lot more capital. I did see
He
that
must
one.
be saying they're going to need a lot more capital. Everybody I know in the banking system says we are so capitalized. Like they said they demand too much capital of us as it is. So he must think they need more. They're going to need more capital for what's coming. That's my guess.
But we are seeing almost no evidence that inflation has peaked. Or I don't see. This was. I was going to get your opinion on this too. I don't know if you saw this in the Wall Street Journal.
Uh-huh.
Costco not ready to cut prices as shipping commodity costs fall, and it's talking about because they've signed contracts from earlier in the year when prices were high, and they have embedded costs from paying people that aren't going away, so they're
Okay,
not cutting.
so it's really funny. It's you guys all know Cameron Dawson. She's been on the podcast twice. By the way, Mike Arnold on the podcast tomorrow. Mike, I have to send you a link. I didn't make the link for that show.
I got to do analysis.
Yeah, you got to do analysis tomorrow.
Oh, no.
So Cameron Dawson told me in a conversation, it was just me talking to her, and I asked her if she would do this on. We're starting something called Futures Edge Shorts. As a matter of fact, Mike, I'm going to text you right now the intro for Futures Edge Shorts. So you guys will be getting a preview of this intro. No one has seen this yet except Jim Iorio and Emma Moolman, who's going to be the first on Traders Futures Edge Shorts. And they'll go on this YouTube channel. Okay, they're going to go on the Path Trading Partners YouTube channel. But anyway, she said that embedded in higher wages is future expectations of inflation, because you don't raise people's wages unless you think you can raise prices to cover it. I loved that line. Go ahead, you can play it up there if you want. I don't know.
I'm going to.
Yeah. This is going to be the intro for Futures Edge Shorts.
All right. I don't know if the sound's going to come through real well.
I can hear it.
That wasn't me, by the way.
That's the intro. So, and then essentially, the first guest I think is going to be Emma Moolman. I think we're going to record it tomorrow, and she's going to talk about the SPR, the Strategic Petroleum Reserve, and then Cameron Dawson is going to come on and talk about the wage component and how it relates to inflation after non-farm payrolls. So those will be the first two. Yeah, that's funny, isn't it?
Yeah, you texted that too, and I'm like,
look at Kuroda just whistling in the background, carrying his coffee.
oh boy, that's going to sum it up at some point.
Yeah.
Oh boy. All right, let's see. What else do we have? What are you OMGing on oil about?
It's oil's higher. It's the fourth straight session, and 6 in the last 8.
Yeah. And we're still
Stuff
not above
going.
$90 a barrel.
Yeah, I actually think it's going to turn down, but it might be a while before it does.
Yeah, I mean, I'm still once we dive into the significant recession, we'll dive down again. But this could stay elevated in a trading range for some time,
Yeah.
which is all right. That's not going to do anything for gas prices either.
No.
Jacob paid $7 in the Central Valley of California on Sunday. What part of Central Valley, Jacob? Josh thinks it's a solid intro.
Wow.
Are those shorts, Bob, or are those
my old I don't want to call him my assistant. He was like my right hand guy. You remember Corey, right?
Yep.
He used to want to make swag. So I'll use Pat Trading Partners, but Pat Trading Partners shorts and Pat Trading Partners long shorts. He wanted to sell those in the store. Oh, that was funny.
Right. So, let's see. Bob, do you think U.S. wants war to go on so U.S. kind of export its inflation to other countries of the world through currency fall-offs as dollar becomes more valuable and Fed tightens?
This is a tough question to answer on a recording, but since it's a very intimate setting and doesn't go anywhere after this, it's not like it gets recorded and posted. Yeah, I do think that the administration and, by the way, both sides, not one side or the other, like that this war is going on because both the Republicans and the Democrats, to whatever degree, serve the military-industrial complex, which now is getting more money. So, yeah, I don't know about the inflation part of it, Pavneet, but I do think they want the war to go on. Yeah, I do. I don't think they want it to go nuclear, but I do think they want it to go
on. Were you guys able to verify that arms are more common than fixed mortgages?
No, but they may be.
The stuff that I've seen
wait, adjustable rate mortgages.
With the stuff
we were just talking about a war, and he said arms.
Oh well, yeah, arms, adjustable rate mortgages.
No, fixed rates are more. There's more fixed rates, but there's a lot of adjustable rates.
There are more fixed rates, especially a lot of people financed on the last push down during COVID, refied. So yes, you do have arms, but there's not a lot of. Not as many of them coming due in the short term.
2025 is when it's going to be really bad, but they're going to start in late 23, early 24.
Yeah, well, and interest rates could be different by then.
Yeah, not according to all the Fed speakers, but they're never right.
So again, I think they're going to hike, and I don't think their pause is going to last as long as they think. However, they're going to keep hiking into that pause.
Right.
We'll debate that. I mean, but then it's not a pivot because, hey, they've already paused. So, right. And then once they start to cut, watch out. Bob, what are your thoughts on, I've given everybody my thoughts on Credit Suisse. Do you have any thoughts on Credit Suisse?
Credit Suisse's influence and therefore their potential for contagion has been shrinking for a decade. So, my thoughts are it's a crap company. It's a crap stock. It might not last, but it won't cause a contagion. I think non-bank entities are at much higher risk of causing financial contagion than banks.
And I've talked about it. That was the big FinTwit stuff. I even posted a video to our Discord, which I thought was pretty well done about the risks of Credit Suisse. Yeah. Do they have book problems? Yeah. But is it going to take down the financial markets? No. And that's why I said even on Monday that all the people who were, I was going to say idiots, who were harping all weekend and focusing on it, there's people are still focusing on it. Like, you got to be prepared for the Credit Suisse default. They're going to have to backstop the whole world economy. No. Credit Suisse is already crap. Just like Deutsche Bank is already crap. People are prepared for a disaster at Deutsche Bank too. Yes, there could be a ripple effect due to the amount of derivatives, but you have some smarter people right now saying, okay, what's on our books where we have exposure to Credit Suisse and Deutsche Bank and some of these other crap banks that don't manage their books very well. So, yes, we can get some of this. Why also, look, Cash and Carry even said stuff can break. This is not a shock. FinTwit has been blowing up more rumors and everything else than anything else, and everybody's. I had an analogy because I was talking to somebody earlier today. It's like if I moved back to LA and then I prepared every day for that big earthquake that's coming. Like I literally stood in door frames, ran from place to place to get in the next door frame. Yes, could a big earthquake hit LA? Yes, at some point will it? Yes, but I can't live my life like that. I can't be going into the markets like, is Credit Suisse going to fail? Is something going to break it? No, we have positions on. You maintain stops. Could we have something? I think if we're going to really have something break, it's going to come more out of left field. It's not going to come from, Credit Suisse could go under, but it's going to be like, all right, that's done.
It's going to be more like a long-term capital type of situation than Credit Suisse.
Yeah, long-term capital, go back, look at that one. That, you know what, you're going to have something like that unravel where it's not on the radar screen.
Yeah.
Sorry, that's just, I get tired of all this stuff. We're just from one thing to the next with FinTwit, with this is going to break, this is going to break, this is going to break. Yes, and the Fed even said something's going to break, which I love today. So thank you for bringing that up, Bob.
Yeah, you're welcome.
Sterling, but comment on the military-industrial complex. I'm so tired of war. Can we just be done?
Well, what did that say? Let's see.
Yeah, sorry.
I used to scoff at it as even a military-industrial complex, but you'd have to be a fool not to see it now. Yeah, I mean, it's Eisenhower frickin' warned about it, for God's sake. Eisenhower. Dwight D. He's supposed to be Lincoln's assistant treasury secretary.
Oh, boy. Panvit, Bob, where do we see the debt ceiling for the government with all the rising rates? Like, there's any limit to how much they can borrow since interest needs to be paid? Nope.
There's no limit to what they can borrow. The only limit is a collapse. I mean, we saw that with Japan. Obviously, U.S., much larger economy, much more influential. But that might only mean, Pavneet, that they can borrow more and longer rather than less. I wouldn't worry about there being a cap. I would worry about the result of the fact that there's not a cap.
That well said. George, most of Ukraine aid doesn't even go to Ukraine. It goes to Raytheon and company to build weapons. Yep. Unfortunately true. Mm-hmm. But Dr. Michael wants to know what the best Swiss bank is.
Oh, God. It's probably the Swiss Central Bank. It's probably the
Swiss Central Bank. Yeah. They have some decent stock holding portfolio based off.
Yeah, I don't know, Dr. Michael. That's a good question. I really don't know. I haven't spent much time looking at the balance sheet of Swiss banks, but if you have an actual real reason to ask that question, I know someone who knows. I can find out.
Was Credit Suisse always this bad?
So Credit Suisse was one of the first ones to have trouble during the credit crisis. And I only know this because a friend of mine was at ABN AMRO in Chicago. He was a client of mine, and then he's still to this day probably my best friend in the industry besides Mike. He went from ABN AMRO and he took a big job at Credit Suisse New York. And about 6 weeks in, he calls me and he's like, I might have made a mistake here. I'm like, wow. He's like, shit's really bad. I'm like, what do you mean? He's like, I can't say much. I got to go. And then literally, he was out of work 6 weeks later. His unit blew up, and most of that bank blew up at that time. And they sort of restructured and came back, but they didn't come back very well.
The two I've been on my radar screen for years are Credit Suisse and Deutsche Bank. I wouldn't. You couldn't offer me enough money to take a position with them because you might be out of that position.
Yeah,
Unless
yeah,
it's like it's some obscene thing with for a month payout. Fine. Uh, Sterling. We don't. I don't even have to prepare.
no,
We
you
just have look at all the smart people in here.
yeah.
This moment feels like stagflation, but we're just in transition. Reminds me of the inflation. Yeah, his it might take a couple years too to get out of this thing. It's transitory again.
Yeah.
On a long enough time frame, everything's transitory.
Right. That's the funny part. And by the way, the one idiot and then Coco, who is not an idiot, Coco is just misguided. Um, the one guy was like, stocks always go up. Over a period of time, stocks will go back up. Yes. It's just like anything.
Yep, and it's not every stock though.
Yeah.
And if you buy them at stupid prices, it may take a very long time to get back to stupid prices.
Yeah.
Coco's been handed his walking papers.
He's out.
Yeah,
Losing up, buying
well,
dip.
what was this thing he makes? $500,000 a year and never has a losing month, and he's here trying to troll this channel.
Coco said that.
Yeah, no, not Coco. It's Tom
Oh, yeah.
Tom.
Tom. He's an idiot.
Tom Tom. You know what? If you're making $500,000 a year, you don't need to troll another person's channel. Go do your own channel.
I like those people. I've challenged those people. Those I've never had a losing month. I'm 97% probable. Every one of those people I've said, if you can prove that to me, I will guarantee you at least $20 million in salary from Goldman Sachs. I will walk you in the office in New York myself.
Yeah, that's where it's absurd. You've never had a losing month. Well, right there, you. That's what got Madoff at the end.
I'll walk you right in.
You know what? It's absolutely absurd.
Mhm.
Geez, even the best stuff I've seen out there, you can have a losing month. The markets don't always have to be conducive to your style.
Yeah.
Ugh. So, uh,
What else you got?
Bob, are we nearing the point, or do you see a point where the national debt could force the Fed to cut that record national debt? Cutting because
No,
of short-term refinance, where I don't see us anywhere close yet.
no. The
At
Fed's
some
not
point,
cutting anytime soon, guys. Stop looking for the Fed to cut. I'm just going to go to what Mohammed El-Arian said because I think he said it best. Those of you that are looking or waiting for a cut, better be careful what you wish for. Because for the Fed to cut rates, that means something is really broken. And that likely means one or all of your assets have gone to shit. So just you should hope they don't cut.
Chris asks, I would like to get your thoughts on the non-farm payrolls. Do you think we'll miss or make it, and why?
I think we'll beat. I think so. It's expected at 250. I suspect it's going to be around 270. I don't think it'll be really dramatic. But this is one of those things like I don't have a set of data that I look at and analyze and come to that number. Just kind of try and think what would affect the market the most. The best thing for the market is a really calm number. Okay. If all of a sudden we have like negative 80,000, stocks are going to scream. Okay. They're going to absolutely scream if the number's negative or really bad. The unemployment rate, they're expecting it to be the same. I suspect it'll tick up a little bit. And I also expect a commensurate adjustment with the labor force participation rate. I don't necessarily think the JOLTS jobs number was weak because they removed postings. I think people have started to get uncomfortable with price increases and they've taken some of the shittier jobs just to bring money in. That's my opinion of it. But again, I don't have a model that I follow on this. I think we'll get a little bit of a beat. And if we get a little bit of a beat on the headline number, then I think that informally confirms what I think about the JOLTS number. I got to look at whether they're part-time or full-time jobs, but I wouldn't even be looking at the headline number, guys. I'd be looking at the unemployment rate versus the labor force participation rate, because obviously if the labor force participation rate goes up and the unemployment rate goes up, that could just be because more people came into the market but didn't find jobs yet. So it's not really a good indicator. So you look at those two things together, and then you look at wages. If wages are still going up, that means companies still plan to raise prices in the future.
So, Boba, how will it affect the market then? What's
Yes, I think we just kind of cleared that up. If we get a real big miss, stocks will probably rally. But if it's anywhere where wages are up, the unemployment rate is lower, we get a big headline number, any combination of those things, the market's likely to leak a little bit. Just watch yields. Just watch the response of yields. Yields and the market, the inverse correlation has been really spot on lately. So if you see yields moving, that's likely you're likely to see the equity markets moving the opposite direction based off that number.
Strategy wants to know how many months in a row does he need to show positive returns? And since you used to run a fund or used to be part of fund, how many months, Bob?
Okay, so if this is a legitimate question, here's the funny thing. So my role at the fund of funds was actually emerging managers. Mike, guess how many years emerging managers, how much their returns were, like in years?
3.
3 years or less. But we didn't look at anybody with less than 2 years. So you had to have between 2 and 3 years of returns to be considered an emerging manager. Okay, now, if within those 24 to 36 months you had no losing months, I would throw your shit away because I'd know you were Bernie Madoff. The only way that you would have no losing months in 3 years would be if you, for example, had a long only gold fund and gold did nothing but go up for 3 years. That'd be the only way. So yeah, I hope that answers your question. You have to have good performance, not no down months. No down months is it's just idiotic to say that. I have no down months. The best CPA I ever saw was Monroe Trout. And the reason I say I saw it, we had money in his fund when we were in the fund of funds, and only because the founder was his CPA in the early years. That's the only reason we were able to get in. It was for a very small amount. And also, the guy on the desk next to me covered him in the futures pits. It was one of his clients, and he was the smallest one of his clients. So I saw the actual trading, and it was bizarre the way they would put the orders in the pit. But Monroe Trout had 2 down quarters in 10 years. The rest of his quarters, he had plenty of down months, but he had 2 down quarters in over 10 years. And people were like, wow, that's unbelievably spectacular. And I agree.
Yeah.
Totally agree.
I mean, we did deep when we were running the stock think tank. You could see it. Did we have down months?
Yep.
Yeah. Did we do pretty well? Yeah.
I mean, it really was.
But you know what? You're gonna have down months. They don't have to be huge, but
Yep.
that's where if somebody says I don't have down months trading for even stuff that's non-correlated. Like trading strategies that are non-correlated will have overlap where neither of them do well for a month period. That's why quarterly is much better than monthly. But anybody with at least a halfway long-term track record who says they never have a losing month is full of absolute crap. Because even your high-frequency algos can have a bad month.
I'm going to show you guys a really, really good fund. Mike, what's the best way to send you the sheet so you can put it up?
What format?
Can I email it to you or no? Is that too hard for you to get it up there?
You don't want to say, is it too hard to get it up? with anything.
Is it too hard to place it in the live stream? How's
I
that?
If you email me, I will I will get it up. That sounds worse.
That sounds worse. All right, so the last one I have is August. Now I have to say, full disclosure, and I don't know. I'm going to send it to you anyway. But I have to say, for full disclosure, I don't represent these guys. If you feel like you want to invest with them after seeing this, you got to reach out to them yourself. You got to do all this. I have nothing to do with this. I won't get paid. I'm not selling this or promoting it. I have no financial relationship with them. Okay. I have to say all that stuff because if somebody all of a sudden invests and it looks like I'm trying to sell this product, I am not. Okay. I happen to know these guys and that's it. By the way, I know these guys because their original fund, Clawton Capital, was one of our investments when I had the fund of funds. Crap. I think I just sent you an empty email, Mike. Did I attach it? I attached it. I just sent an empty subject line. Okay. So we had money with these guys when we had our fund of funds, but it was in their Clawton Capital signature fund. This fund is called Agility Trading. Now, the reason that we had money with their flagship fund was because it was really non-correlated. It didn't correlate to anything. Now, there'd be times we'd do really good in the rest of the fund, and these guys would be down double digits, but they didn't correlate. So they were a non-correlating asset, so they were really good. So I've kind of kept in touch with them because they're really nice guys. And what they did was they decided, because people don't really understand non-correlating assets or why they're valuable. So they said, well, we decided we needed to correlate it a little better to equities in order to get money in. So we launched a second fund, and it's called the Agility Fund, which has a core long S&P holding. They're basically always long the S&P, and they trade the Clawton Capital Fund within the Agility Fund around it. Okay, so that they have a closer correlation to equity returns. That was their deliberate thing. So they're in the blue. Okay, now look how many down months they have, but look how much better they do than the S&P. And look, now this particular fund would have just exceeded emerging manager status by 3 months, 4 months. And they've been at it since May of 2019. Now you could see on the year to date, we all know how bad the S&P is down this year. It's like in the 30% range. NASDAQ's for sure in the 30% range, and they're down 5. That's actually what a hedge fund is supposed to do. They're supposed to outperform to the downside. In other words, when the S&P loses, they're supposed to lose less. When you look at the 3 previous years, they outperformed dramatically, the S&P. Maybe last year, I'm not sure. Yeah, last year they outperformed as well. And since inception, they've crushed the S&P. So this is the kind of fund that I would be looking at as a fund-to-fund manager and say, I want more information. I wouldn't even invest in this fund based off of this. Okay. The first thing I would do is, you see that area there in April, May, and June of this year. And then the other area in January and February of this year. And then the other area, I don't know. It doesn't really matter. We'll just look at those 2 areas, those 3 or 2 areas I described. I'd want to go in there and look at those and make sure that they were doing the exact same types of trades as they were from January 2020 through May of 2020, or February of 2021 through April of 2021. When they were up a bunch of months in a row. I want to make sure they're doing the same exact types of trades. And it was just market conditions that their particular process doesn't perform well in. If I saw them trade or change the way they were trading, crumble it up, throw it away, they would never get our money.
And why is that? Is that something to do with strategy drift?
Yep. Strategy drift or style drift, whichever way you use it.
Yeah, why don't, because then you're not that can shift at any possible time, and then your track record has to be a lot longer because hey, anybody can do well for a couple years.
Yep.
I've seen people do well, and anybody even can show me, hey, I never had a losing month in the last year. That's fine. I mean, there are plenty of times there. All right, that you could be on the short term strategies completely aligned with the market, but if what's to say that you will continually perform at or even outperform the market if your strategy or style is constantly changing?
Right.
Nothing, unless you're one of those very rare individuals who's incredibly gifted.
So let's look at a couple of these comments now, Mike. Paul Wisniewski, I'm up 30%, 78% winning streak as of 10-4. Starting when would be the first question I would ask you. And if it's this year at our fund of funds, we wouldn't be interested at all if it's 1 year. Strategy, because you could just be a short guy. I short the market. That's what I do. And yeah, you'd be doing well. If you shorted the market starting in January, you're probably up 70.8% of the time. Not saying that's what you do, just saying that would be my first question. And then strategy, Freeman. I'm half serious, half curious at this point. I'm interested if they're looking for time consistency or percentage returns. Every investor I've ever met is looking for consistency of behavior, Freeman. Consistency of behavior. They almost don't care what your returns are, because what they do is if your return profile fits something that they need to match their entire portfolio, then they slot you in there. And if your process or your actions are inconsistent, they can't use you. Because there might actually be, look, our model says that when the equities are down, you'll return somewhere between 5 and 15%. And our model says when equities are up, you'll lose somewhere between 3 and 5%. We're okay with that. And then I'm obviously oversimplifying it. But then they slot you in there. And if you act differently, you're out. Or if they find any evidence that you act differently, you would have never gotten money in the first place. So everybody thinks that people who allocate money are looking for returns. They're not. They're looking for consistency of process where they can predict with a high degree of certainty what you're going to be like in their portfolio. And then you either fit or you don't. And if you don't, it's nothing personal. Nothing personal at all. Yeah, year to date. Paul says year to date, and I'm not looking for a job. I'm not offering you one, Paulie. Just so you know, I'm just going through some of this stuff. When people put up their numbers, they're generally proud of it, right? And you should be proud of it. Year to date, that's good, man. You did good. But it's consistency. And again, an emerging manager was from 2 to 3 years of returns. If you had less than 2 years of returns at our fund of funds, we wouldn't even look for you. We wouldn't even look at you because it's not enough data. And I would argue 3 years isn't enough data. Listen, even somebody who's been investing since 2009, what is that, Mike? 23 years now? You've never invested in a market that the Fed isn't moving rates around to try and help or hurt the economy. You've never invested in that. So what if that were to stop? What do your returns look like?
Well, that's what's going to be so interesting since essentially the Fed started their more aggressive hiking schedules. It's going to separate a lot of wheat from the chaff.
Yeah.
Because we might be finally getting into the fact that there is no Fed put for a while.
Yeah. I like what Strategy Freeman said here. I'm exclusively trading futures until the bear market is over. I can respect that. Make sure that's always your process, though, dude. Make sure that doesn't change. Because if for some reason down the road you're raising money, you've done really well, you've had good returns, a bunch of friends start asking you if you'll manage money, blah, blah, blah. That needs to be your permanent process if that's what's working for you, in order for you to be able to adjust if things change. It's like, think about a chef with a recipe. This is an analogy Mike and I used all the time. If you don't know what your chili recipe is, you can't work on a Chipotle chili and see if you can make it good. Because it's like, well, sometimes I use half turkey, half pork. Other times I use beef and lamb. Other times I use soy and beyond ground meat. And sometimes I put a pound of salt. Sometimes I put a quarter of salt. I don't know. Well, can you make us a Chipotle chili? Yeah, I guess, but you don't even know what your starting chili was like. You have to have your process down. You have to be able to answer every single question. Being in some of those meetings when we were trying to raise money, oh my God, the questions they'd come up with. Unbelievable. How the detail in the questions that they would ask you. How would you guys handle this? Shit, I don't know. Luckily, my partner did. But anyway.
I like that recent session you did with the FAR guy or whatever his name is, the one that said Jay Powell is a Jesuit trained lawyer.
Yeah, Michael Farr said Jerome Powell is stubborn. He's a Jesuit trained lawyer. That was his way of emphasizing that Powell was stubborn. I thought that was great too. Also, Michael Farr he's been doing this for almost a half a century. And he said, I've been doing the same thing because it's what works for me. I buy boring companies that make money. I've owned Microsoft since the single digits. That's a guy who knows his process. And that's just his process. If what he does doesn't fit what you want, he'll buy you a cup of coffee and bid you adieu. He doesn't care. This is his process. You either have a slot for him or you don't.
Yeah, he's not gonna. Is he going to be jumping into triple levered growth funds?
Nope, doesn't.
No,
Not something he does.
not. But you could make so much money. You could crush the market, Bob.
What about those low float IPOs? How are those doing?
Oh,
Anybody look at those lately? I didn't.
so yeah, it's just this is why I say, once you got your process down, it becomes boring. It better be
Yeah.
boring.
Yeah, you want it boring, guys.
I mean,
You do.
it's
You
why
really do.
I sometimes, this is not the most conducive YouTube channel for if you want the new system excitement. I don't throw up a new indicator every week. Why? Because you don't need it.
Mike
Well,
is
I
not the
don't.
guy creating those commercials that says, "You've never used this price action before. This is big." It's not big. Just
It's
so you know, it's not big.
it's consistency. It's doing the same thing, the repeatable tools, because once it's repeatable, it can be fine tuned, and then it can be, it can have consistent returns. If it's always changing, oh well. So I think this video is helpful for people because it at least gives them a little more insight, and that's why most of the stuff that's out there is a complete and utter joke.
Yeah.
Like, well, this
Thank
worked for
you.
the last month.
Put Freeman's quote up, could you? That's an awesome quote.
What, this?
Yeah. Not exciting. That's exactly why we're here. Basically, that's a great quote because that's what, again, Mike and I want you guys to trade for a long time. And the best way to be a trader long term is to trade for a long time. And if your interest is low float IPOs or the new indicator, this is big. Am I the only one who's seen that YouTube commercial? Am I like making a fool of myself right now?
I don't see YouTube commercials because I actually, unfortunately, pay YouTube to avoid commercials.
Yeah, there's these guys that keep going on. You probably used price action strategy in your futures trading before, but you've never used this because we just invented it. This is big. It's all over the screen. I'm like, it's not big. It's not.
I
Anyway, I want to tell a quick story, and then if there's any more questions, otherwise I'll go and I'll come back in the thing tomorrow. Mike and I met because I was doing a live session at the University of Illinois in Chicago for customers, clients. Mike actually bought my trading strategy. He learned it, and then he showed up at the live event. Now, obviously, I knew him as Speculator. That was his handle in our chat room. And he showed up and he approached me in the first break and he said, so I've looked at your stuff. I like it. And I think I've improved it. Now, I'm not really an arrogant prick. I play one on TV, but I'm really not. I went great. Can we talk about how you improved it? And he said, yeah, sure. So we sat down. I don't think it was that same day. It might have been another breakout session. I don't remember. But Mike showed me a bunch of stuff that he did, including his rotation zone, which I still use, and some other things. And Mike really kind of like fell in love with and refined what was my space concept at the time, which we now call a clear path. And Mike came up with other versions of the clear path. And I actually said, wow, you did improvement. Thank you. Can you teach me the improvements, please? That's how you take a process and make it better, not by adding some indicator that works for a month and a half. And knowing Mike like I know him now, when he said he improved it, he didn't look at a week's worth of data, or when he said he liked my space concept, he didn't look at a week's worth of space. He looked at 10, 20, 30 years or whatever he could find data of. So this is what I always go back to when people say to me, well, aren't you supposed to improve your process and change it? Yeah, but not with TomTom. You're supposed to improve your process with actual research and data, and you're not supposed to make ad hoc changes because they worked on a given day. Anyway.
Yeah, it's so funny because one of the most hysterical things is if you truly backtest MACD with the standard settings that were developed, they were actually pretty much curve fit to data in the 60s. It worked for part of the 70s, and since then it's fallen apart. But that's still what everybody would use that with a grain of sand. But a lot of people, these are the settings you have to use. Actually, it hasn't worked well with consistent returns since the mid to late 70s.
Right.
So, it is just, well, this is tested out well. No, it hasn't. Sorry. And that's still being promoted to this day. And that's let alone that's been around, and most people just take things. That's why most people throw up indicators or hear about the next hot thing, and they just sort up with default parameters and they're like, that worked. That works great. And then it stops working. That's why they look for the next one.
Yeah.
And that's why you can have it's separate than that. Nothing works 100% of the time. That's why you're going to have losing months at some point. To bring it full circle.
It's funny because it's one of those things. It's like, that's why people like TomTom, it's like, just dude, get away from us. Because as soon as somebody says they never lose money, I know they A, always lose money, or B, have never traded. Not consistently. You just know that. It's just something you know. It's like a doctor saying they've never lost a patient, or a lawyer saying they've never lost a trial. It's not true. So anyway,
unless you've had like one trial,
one trial, yeah. I was 1-0 after my first boxing match, Mike.
Yeah, I'm 100%. I did it once.
Yeah, I was 1-0.
I'm done. I'm out.
Yeah, actually, I got to 5-0, and then I was 5-1, 5-2, 6-2, 7-3, and my fourth loss. I was like, this hurts. It really hurts.
I don't want to get hit anymore.
Yeah. Oh, by the way, I had to throw something out. Amos Holstein. I should say his name right around Yom Kippur. Amos Holstein said a couple of things today that struck me as really ridiculous. By the way, he's Joe Biden's top energy advisor. I'm not picking on Biden here. He was asked on Bloomberg what they're going to do about OPEC and gas prices potentially going higher. Listen to this answer. We're going to take a multitude of steps with the private sector in the United States, with our allies, with the SPR, and we're going to talk to Congress about what kinds of tools we may need. We're not quite sure what we need, but we're going to have that conversation and make sure we have every tool available to us. Does anyone hear an answer on that? It was like a 5-minute answer. And then he was asked if about production in the U.S. And he said, for the last several months, we've had conversations with the leadership of almost every major oil producer in the U.S. And we told them, what do you need to incentivize production? They have what they need. They don't need anything else. Those are both from Joe Biden's top energy advisor. So I'm going to go on record as saying, don't blame Joe Biden if that's his top energy advisor. That's all I'm saying.
What was the thing I saw about you shouldn't you gotta it was with wholesale prices. Now I forget. Like you can't charge more than wholesale prices.
Yeah, he's basically they were going to try and push oil companies to keep their prices at wholesale. Jimmy tweeted that out.
How
And
is
Jimmy was like, and why should they do that?
yeah, but yeah, okay. Well, how do people just theory? It's like if I went to Costco and said you should only charge me your wholesale prices. How does Costco stay in business?
Yeah, Jimmy also said something funny. He said, price caps are probably going to work for crude oil. We should price cap everything since it works. Let's just price cap everything.
Uh,
I want them to price cap the McLaren F1 at about $28,000.
I'll
If
buy
they would,
one then.
if they would do that, I would appreciate that.
And how many would be produced?
That's not my problem. Just price cap it.
That's
Cap the
didn't
price.
Belarus like price cap everything and like literally all store shelves are going to be empty in a matter of days.
Yeah,
Be-
there was a McLaren, and the reason the McLaren F1 dropped in my mind is because one was washed away by the storm surge here in
I
Naples.
saw that.
Also, my cousin lost his S-Class Mercedes. It's just gone. It was in his underground parking garage, which shouldn't call it underground. It's under his building, but it's ground level, and it's open. There's just pillars, and it's open parking, and he's on the water. And I'm like, what do you mean it's gone? Where is it? He's like, it's gone. The guy who manages the building said, was your car here? He's like, yeah, it's not anymore. Where is it? They don't know. No one's found it. No one's called him. It's just gone.
It's gone.
Okay, and it's gone. I'm guessing it's somewhere in the Gulf.
It's not there though.
That's not where it's supposed to be. And no one in the area called up saying there's a weird S-Class Mercedes in the front yard. It's just gone. And the strange thing is there's pillars. So I imagine when the storm surge came, it was bouncing around in the pillars
like a
before it
pinball.
got taken away.
I wouldn't want them to find it at this point.
Yeah. Yeah.
Bob, how many cars were destroyed down there? I'm asking to see what to expect in car prices shortly.
Okay, so I don't know for sure, Sterling, and I haven't seen anything on the news in terms of numbers, but I heard somewhere in the range of 1,500 personal cars are beyond repair. It seems low to me, but also I know that like a dealership down here, Estero Chevrolet, which is where we've gotten our Blazer serviced. So their sales floor is half open, and about 40% of their cars were damaged beyond repair. So I don't know if that helps you at all.
Well,
By the way, my wife said she wants a Toyota hybrid now, Sterling. I don't know. So we'll see.
Rich wants to know if your favorite car is still a Ferrari.
It is. I don't know why that would change, Rich. Although I really am partial to McLaren. So I mean, it's a money's no object car, and currently money's an object. So let's not worry about it. But I could probably find a used Ferrari in about 10 years that I would scoop.
See, all right, when I buy the private island, I'll consider a McLaren. Other than that, no. Nope. All right. Yeah, we see that. I have to. I didn't want this to go on as long.
That's okay. I got to go, so I'm going to go. Goodbye.
All right, Bob. You're coming on tomorrow for the Open?
I'll be on tomorrow after non-farm, but you might have to text me to remind me, Mike.
I will remind you.
All right. See you guys.
All right. See you, Bob. Hey, I'm going to have to wrap this. I actually have to run an errand. So, pretty much everything still stands from the analysis. Watch for the double tops, or the only one that's confirmed is the Dow and not triggered. I'm really keying off the S&P one. That's the one. That's the one that's going to matter the most. Other than that, going into overnight, I'm just keeping an eye on that mini 1 hour double bottom. If you made me make a bet, as long as this 4 hours not triggered, I am aiming for higher prices with the recent. This is a pausing area with stuff catching up, but if that 4 hour triggers, then probabilities change. With that, by the way, the mini potential, remember I said watch for that 62.5. We did not close below it, but nailed it exactly after we broke down from that 50. We're in the 62.5. That potential double, which never confirmed or triggered, never even confirmed, so it can't trigger, is off the table in notes. We should get some volatility in notes, though, tomorrow with non-farm payroll. Other than that, we'll just reconvene tomorrow and see where that we stand, because I have to run. You are welcome, Amadeus. You are welcome, Stat. I hope some people learn some stuff about funds and management and money management and stuff. Maybe you don't even care, but this is not a lot of stuff that other channels will talk about. They will try to pump things needlessly, even when they don't know what they're talking about. So you're welcome, Dr. Michael. Oh, just in time. Downside double top, upside 4 hour SMA. The downside is double top. The 4 hour, remember, we're still technically in because of the close above the 62.5. But if you're watching to the upside, I'm just keying off of really the upper end of the rotation zone. And that would just be a breakout play, and again, back above the 62.5. And if you're playing along at home, the minor target for a stop raise on the breakout play is about 38.44. The next significant target is 38.91. Those are your two. Those will be the two on the breakout play tomorrow, especially if we have a stronger breakout and we get a rip your face off rally. Those are the stop raise into a clear path. Major targets, not only the 37.5, but you see the breakdown zone. That's if we do not trigger the potential double, which is not confirmed. So, with that, since we're getting the chat bots in, I am going to wrap it up. I will be back tomorrow morning. So will Bob. Thank you for tuning in, and I shall talk to everyone later. Bye for now.